on, everybody? Welcome back to my YouTube channel. I know it's been like 3 weeks since my last video, but we're just gonna get right back into it. So in today's video, my plan is to go over a couple of trades I took today to show you the whole process. And then also throughout the video, like always, I'm gonna be dropping gems. So make sure that you pay attention. And also, if you are not subscribed, make sure that you subscribe to the channel and also leave a comment if you have any questions or if you see something that you like or learn. So nonetheless, let's just get right into it. All right, so the first trade I took today was Microsoft calls. And the reason for this is because starting off with looking at SPY. So why are we looking at SPY first? Because this is, kind of how the overall market moves. So if SPY is going, crazy to the upside, a lot of stocks are going to go crazy to the upside. So what I like to always do is start off in the higher time frames, right? So if we take this to a daily time frame, we can see that SPY is in what? So let's just do little quizzes throughout this video. So this is quiz number 1. If we see that SPY is, so we got this here, and SPY is sitting in this area. What is this area? I want you guys to tell me in the comments. Okay, so I'm not going to say what it is. I'm going to let you figure that out. So if we see SPY was over here yesterday and we can see SPY broke out of it, then we can expect more upside, right? So now let's go back to Microsoft. Okay, so if we go back to Microsoft and let's start off on a higher time frame. So let's start in a 1 hour. We can see that Microsoft has a 1 hour demand level, right? Because price gapped up, so we left behind demand. And if you don't understand what I'm talking about throughout this video, or if there's some concepts that you are unfamiliar with, just feel free to let me know in the comments and I will make sure I cover those for you guys in videos to come. So we see Microsoft has this huge gap to the upside and we leave behind demand, right? So essentially we're waiting for price to come back to this demand level, okay? So once price did that, then we can go down to a smaller time frame to look for our entry point. Okay, so the smaller the time frame we go, the smaller our zone is. Okay, so if we're looking at this on a 3-minute time frame, which I believe I was, so let's see. Yes, so 3-minute time frame here, price gapped up, left behind demand, right? So that is where we want to see some reaction to or at. Let's see. Okay, so boom. As we start off, and also first thing to note is we also have supply right here. Impulse move down, candle before supply, right? So we have this whole supply zone. Price is getting rejected all within here. We sell off. Right here, we sell off. And we see price open right here today. What happens? We sold off. So as we're selling off, we need to look to see where price could potentially reverse at. So that's why we have this demand level down here. And all my plays are called in Cash Capital Investment Group Discord. So if you're not a part of that, make sure you join. Okay, so as price is falling down, we're looking for some sort of reaction, okay? So we see price reach this 3-minute demand. And what do we see? Price is starting to make reversal to the upside. So now to find our, the best entry possible, we need to look at a 1-minute time frame. So here we go on a 1-minute time frame. What do we see? Price moves to the upside, comes right back down, and we create this high. Okay, so as price comes back down, we see what? We tap back into this 1-minute demand zone, which was created right here because price gapped up, left behind demand. We tap back in, and we also tapped into this higher 3-minute time frame demand. And what happens? We take off. So if we take our entry off of that and have our stop loss here, look how much we're risking for downside. 41 cents, okay? So if Microsoft stock dipped down 41 cents from where we bought it, then we should look to get out of the trade. So if that was to happen, how much would we have really lost on that, right? Not a whole lot. Because if you're doing options and a 41-cent move against your position, you're not going to be losing, 50% of your money. You're not going to be losing even 20% of your money. A 40% move, especially on this, probably going to get you like 3%, right? So just generally speaking, right? Like obviously we can't tell how much it's going to be, but let's say it's between 0 and 5%. Okay, so 5% max is what you're risking on this. And what do we see for the upside? We need to start targeting our highs and higher supply zones. So if we target this right here, we can expect price to take that out. And at this point, I believe I was already up about like 10% or whatnot. And then we see price just continuing higher and higher. So where's our next target going to be? This high right here. And over that, we can target this high. Right, so we had a clean move to the upside. And all we did is just risk 41 cents to capture a $2.69 move to the upside, right? So that's a pretty good risk to reward. So if we took this trade 10 times and we lost 6 and won 4, guess what? We're still going to come out in profit. And that is the whole goal when it comes to trading. You only want to look for high probable setups, because there's no point of us potentially taking a trade and risking more than, what we're targeting or even the same, right? Just, it doesn't make any sense. Why would we want to put ourselves in that position, right? So when it comes to trading, you always want to think about your risk mitigation, because every trade you take, you're going to be risking some of your capital, but we are trying to protect it the best we can. So as price came back up and hit the supply level, what are we looking for? A potential reversal, okay? So I alerted, take your profit up here. And what do we see later on? Price sold right off, right at the supply level. And what do we see? It sold off here, 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 and here, and right there, right? So it's just the history repeating itself over and over and over again. Okay, so now, as we can see, price came back down to this 3-minute demand. And let's switch back to a 3-minute time frame. And what happens? We bounce once again. So here we can start looking for a different entry point. And okay, here we go right here. All right, so what do we see if we delete this? Impulse move to the upside, which is this huge green candle, left behind demand. So now we're looking at this whole red candle as our demand level. Right, so this is an area where we can start taking another entry on calls. And where's our stop loss going to be? Bottom of our demand zone. All right, so just like that. So then we took a re-entry around this area, stop loss, bottom of here, and look what happened throughout the rest of the day. Clean move to the upside. So now on this trade, what do we risk? 44-cent move to the downside to capture a $3.63 move to the upside. So that's pretty good odds, right? Trading is just a probability game. And you get to put yourself in different situations. So if you only put yourself in good situations, you'll come out on top. So this is how I was able to make $1,200 today on Microsoft stock. And total I risked on Microsoft was about like $1,500, I believe. So that's a pretty good return for a day trade. And all that means is you buy and sell within the same day. That's it. All right. So this is trade number 1. And you see here, stop loss, bottom of here, re-entry, stop loss, bottom of there. And we just held it throughout the rest of the day. And you just have to let price do its thing. Because there's a lot of people who always, wonder, hey, Sire, how do I know when to stay in a stock throughout the rest of the day, or if I should just sell it? It's really all up to you, but it's really it's really about knowing yourself. So a lot of people think a stock is just going to move straight up like this, right? Some rare instances that does happen, but majority of the times it doesn't. Usually stocks go up, pull back, go up, pull back, go up, pull back, go up. And what you want to do is look to internal pullbacks. And if you use, your supply and demand zones, you should be able to identify if price is continuing higher or if it's breaking structure to move lower. All right, so this is stock number 1 that I traded today. And next I will switch back to SPY because that's the second stock I traded today. All right, let's get rid of this. Okay, so here we go. So we can see on a 15-minute time frame, we have this high created right here. And then we see this morning, and actually let's just do this from scratch all over again. So we see we have this high right here. So we can use this as a potential target. And then we also see price closed here, this red candle yesterday. So yesterday was Wednesday, the 24th. All right, so in pre-market, what happened? We saw price gapped up, so we left behind demand. So this is going to be our demand level. So we can take our entry off this, stop loss the bottom, and just let it ride. So if we take our long position here, stop loss here, target this high, let's see how much we're risking. $1.08 move to the downside, $3.44 move to the upside, right? And that's on a 15-minute time frame. So if you wanted to switch to smaller time frames, you can catch an even better entry. Okay, so later on throughout the day, as that first bounce happened, we see what? Price came up to this high and sold off. So if we're looking at a 1-hour time frame, price just grabbed that high and just reversed. Okay, so as we look back on a 15, we see impulse move up, candle before, demand. So now let's switch to a 5-minute to see if this looks even cleaner. Impulse move up, candle before, demand. All right, so as price came back to this demand level, then we can start looking to take another entry. Okay, so first let's mark off these lows. Boom, we got that there. Price took that out. And we also have this low down here. We just want to keep it in mind. All right, so I took my entry about right here. Stop loss bottom of here. And on this, I took 417 strike price calls that expired tomorrow, Friday the 26th. And just held it on throughout the day. And it was a clean move to the upside. And this was 136% return, one trade. So now when it comes to finding our targets, we're just going to target supply zones and we're going to target higher highs. Right? Target here. We can target this right here. And that's why price sold off a little bit. And as price is moving, like I said, we go up, pull back, go up, pull back. So on those pullbacks, we have to understand where price should pull back to. And if it breaks that, then we could potentially see a reversal. So if we look over here, we see impulse move up and we have this demand zone right there. And that's why price bounced exactly at that level and continued higher. So let's say you took profit right there. You can take a re-entry right here and just hold it on throughout the day. And that's all it is. So now a lot of people had questions about, figuring out what strike price do I take? So it's all about your account size. Okay. So if let's just say you have a let's just say a $500 account. Okay. A lot of people are scared to be like, I'm going to put $400 of my 500 into one trade because they aren't trading confidently. They're not trading, using the right methods. So if we take the method that I just broken down to you over the past 2 trades, you see here, you're risking a 60-cent move to the downside to capture a $4.44 or 47-cent move to the upside, right? So if you put $500 or you put 400 out of your 500 into this one trade and you're only risking 60 cents to the downside, are you risking your whole $400? Yes or no? The answer is no, you're not. You're probably only risking about maybe, I would say 7%, if that, of downside movement. So when you have a small account, it's easy to grow it because you can almost put your whole portfolio into one trade, but you're not risking your whole portfolio. That's the thing, because a lot of people with small accounts, what they'll do is they'll have a $500 account and they'll say, I'm only going to take trades, that is worth $20, right? So let's say you get 100% return, and now you turn that $20 into $40. That's great and all, but it's not necessarily helping your portfolio in the best possible way, right? You're going to have to slowly grow it step by step by step by step. Whereas if you leverage yourself a little bit more and understand your risk to reward, then you'll be set up in a better predicament, right? And that's all it is when it comes to trading. It's about probability. So now, if you really want to go out of the money for your contracts, what I like to do is just go as far as my targets. So with this, if we see that, price rejected at 417 and we took our entry at 415, I'm going to look to take maybe 417, 418 calls, the highest, like the farthest out the money. That's how far I'm going to go, right? I'm not really going to look to take, 415 strikes or 412 strikes because, it's just super expensive. Who wants to pay $300 plus for a contract? Not me. I'm a cheap individual. So I like to, get the best and get the most out of my money. So this is how I determine what strike price I'm going to take. And yes, I only play weekly contracts. And if it's available, then I'll play contracts that expire the same day. Okay. So those are the two trades that I took today. Or actually, I guess maybe 3 or 4 trades I took today just within 2 different tickers, right? And you don't always have to trade a whole lot of stocks. Just pick a couple and then just hold on to them throughout the rest of the day. Just play it as it moves. So I hope you guys learned something from this video. Once again, if you enjoyed it, leave a comment, leave a like, make sure you're subscribed to the channel because I'll be breaking down a lot more trades and a lot more methods. So just so you guys can understand everything. Okay. I will catch you guys next time. If you, let's see, if there's a specific topic that you want me to make a video on, let me know in the comments and I will be sure to do so in the future. So thank you guys for tuning in and I will catch you guys on the next video.